Welcome to the Passive Path. Today, I'm giving you a clear roadmap to survive and thrive in a future most people aren't ready for. Here's the blunt truth. You're not heading into just inflation or just deflation. We are heading into both at the same time, and the average person will get crushed. Your savings will shrink, your paycheck won't keep up. Your retirement plans could collapse. But there's good news. If you understand what's really happening, and if you take smart, simple actions, you can not only protect yourself, you can get ahead and build serious wealth while others struggle in this video. I'll show you how, why this matters to you, and what steps you can take today. Most financial advice today is stuck in the past. It tells you to save money, get out of debt, invest in the stock market for the long term. But the world has changed. That advice won't protect you anymore. The people following that plan are falling behind. Why? Because they are stuck thinking small. They are focused only on mini economics. Their day-to-day budget, their next paycheck, or small savings account. This is where most people live, and it's why they stay trapped. The rich play a different game. They focus on macro and microeconomics. They watch the big trends. They use those trends to grow assets. While others try to save their way to safety, the passive path is about helping you shift your thinking. To stop acting like an employee and start thinking like an investor, so you can grow wealth no matter what happens. If you want practical steps, real examples, and a clear plan, you're in the right place. Stay with me, like this video, subscribe to the Passive Path, and share in the comments what you want to learn next. Let's keep going. The next step is understanding the big picture and why most people are about to get caught off guard, shall we? Most people have no idea how money actually works. They think if they work hard, save, and avoid debt, they will be fine. That was true 50 years ago. It's not true anymore. To understand what's coming, you need to know the 3 levels of economics: macroeconomics, microeconomics, and mini-economics. Let's keep it simple. Macroeconomics is the big picture. It's things like national debt, money printing, interest rates, and government policies. These forces shape the entire economy. They decide whether assets like real estate, stocks, and crypto rise or fall. Microeconomics is business and investing. It's how companies operate, how investors make decisions, how money flows between people and organizations. Mini-economics is personal finance. Your job, your paycheck, your rent or mortgage payment, your credit card debt, your savings account. Most people stay stuck in mini-economics. They worry about paying bills. They try to save a little money. They hope their 401 will be enough for retirement. This is a losing strategy in today's world. The rich think differently. They pay attention to macro trends. They invest in assets that grow over time. They build businesses. They use debt as a tool, not as a trap. They pay little or no taxes legally, and they adapt when the rules change. Right now, the rules are changing fast. If you only focus on your job and your savings, you will fall behind. If you learn to watch the big picture and think like an investor, you can get ahead. This is the first mindset shift you need to make. Stop thinking small. Start thinking like the rich. The next step is to understand why we are facing both inflation and deflation at the same time, and what that means for your money. Most people ask, are we going to get inflation or are we going to get deflation? The answer is both, and both are already happening. At the same time, here's how. When the government prints more money, that's called quantitative easing. It puts more dollars into the system that causes inflation. Prices go up, real estate goes up, stocks go up, crypto goes up, but it also causes another problem. It creates a bigger gap between the rich and the poor. If you own assets, you get richer. If you only have a job and savings, you fall behind. Because wages do not rise as fast as asset prices. That's the inflation side now. Let's look at deflation, even though prices rise in some areas. The overall economy slows down, debt grows faster than income, People can't afford to buy as much, businesses struggle, jobs are lost. This is deflation. It reduces spending and slows down growth. The government prints even more money to fight this, but it only creates a short burst of inflation followed by more deflation. This cycle repeats until it becomes unsustainable. This is why we are heading toward a depression. Printing money can delay it, but it cannot prevent it. And if the government introduces FedCoin or another digital currency, it could trigger hyperinflation. Just like what happened in the Weimar Republic, Zimbabwe, and Venezuela. Hyperinflation destroys savings, wipes out pensions, and makes cash worthless. This is why the old rules of saving and working for money are dangerous today. If you don't adapt, you risk losing everything you've worked for. But if you understand these forces, you can protect yourself and even build wealth while others panic. Now let's talk about how the rich prepare for this situation, and how you can too. Rich never rely on wages. They focus on assets. Assets are things that put money in your pocket, even when you are not working. Real estate, dividend-paying stocks, profitable businesses, gold and silver, and now some forms of cryptocurrency. Assets grow in value. They generate cash flow. They protect against inflation. They offer tax advantages. Most people focus on saving money, but saving money is not building wealth. It is storing value in a system designed to devalue it. As inflation rises, your savings lose purchasing power. But assets often rise with inflation, sometimes faster. That's why the rich hold assets, not just cash. They also use debt as a tool. Good debt, debt that helps buy assets that produce income. For example, using a mortgage to buy rental property. Tenants pay the mortgage. Over time, the property value rises, your equity grows, and the income keeps coming. All while paying little or no taxes, because the tax system rewards investors, not employees. This is not a loophole, it's by design. Governments want people to create housing, create jobs, and stimulate the economy. That's why they offer tax breaks to asset owners and business builders. If you work for wages and save cash, you miss out on these advantages. Your taxes are higher, your income growth is slower, inflation erodes your savings. The passive path is about helping you break out of that cycle. It's helping you think like the rich and take simple, practical steps to build and protect your wealth. Next, let's dive into crypto and why it's both an opportunity and a risk in this new economy. Crypto has changed the investing world. It created new opportunities for wealth building, but also new risks. In the early days, Bitcoin was worth just a few cents. Today, it has become a store of value, much like gold, far more volatile. Many early investors became millionaires, some even billionaires. That created a wave of retail hype. Millions of people rushed in, hoping to get rich quick. But most did not understand what they were buying. They followed social media trends, celebrity tweets, and viral news stories. This created massive price swings. Bitcoin and other cryptos would rise quickly and crash just as fast, sometimes in a single day. This is the nature of speculative markets. They are driven by emotion, fear, and greed, not fundamentals. Recently, big players like Tesla and Square have both embraced and pulled back from crypto. Countries like China have banned crypto mining, while launching their own digital currencies. The cycle continues. Retail hype pushes prices up, then fear pushes them down. Smart investors understand this cycle. They don't chase hype. They focus on long-term value, and they prepare for volatility. They also recognize that crypto is not money yet. It is a new asset class, a store of value, like gold and silver, may one day become money. But if governments launch FedCoin or similar digital currencies, that could change the entire landscape. It could even make some cryptos obsolete. That's why education is critical. You need to study, not follow trends blindly. The passive path focuses on understanding, not speculation. If you choose to invest in crypto, do it as part of a balanced strategy. With money you can afford to lose, not with savings meant for your family's future. Next, let's explore why real estate remains the #1 wealth builder. And why it's trusted by the world's richest investors. Real estate has built more millionaires than any other asset class. It offers unique advantages that other investments can't match. First, leverage. Banks will lend you up to 80% or more of a property's value, but you keep 100% of the upside. No other asset class works like this. Second, cash flow. Your tenants pay the mortgage, the taxes, the insurance, and often more. They cover the costs while you build equity. Third, tax benefits. Real estate investors can deduct expenses, depreciate property value, and defer capital gains through strategies like 1031 exchanges. In some cases, they can avoid taxes entirely. Real estate is a physical asset. Real estate is a physical asset. It serves a real need. People need places to live, to work, to shop. Unlike stocks or crypto real estates, utility does not change based on market emotions. A house with 3 bedrooms and 2 bathrooms. Today, we'll still have 3 bedrooms and 2 bathrooms tomorrow, even if the dollar loses value. Fifth, protection against inflation. As prices rise, so do rents. And so does the value of property. It protects your purchasing power. That's why governments often support high real estate prices. They know the entire financial system depends on it. In fact, central banks buy billions in mortgage-backed securities every month. They do this to keep real estate markets stable. When property values drop, banks lose collateral, debt goes bad, and the system risks collapse. This was clear in 2008. It remains true today. Real estate investors who understand these principles and who choose properties wisely can build lasting wealth. They can earn income, grow equity, and enjoy tax advantages, all while letting tenants cover the costs. And this is how many of the world's richest people got started, and why real estate remains a key part of wealth-building strategies. Now, let's talk about the power of debt and how the rich use it to multiply their wealth. Most people fear debt. They see it as a burden, something to avoid. But the rich see debt differently. They see it as a tool, a way to build wealth. There are 2 kinds of debt: bad debt and good debt. Bad debt is borrowing to buy things that lose value: cars, clothes, vacations, credit card debt. These drain your wealth. Good debt is borrowing to buy assets that produce income: rental properties, businesses, even certain investments. These grow your wealth. They pay for themselves. They offer tax advantages. For example, if you buy a rental property with a mortgage, your tenants pay the monthly loan. The property value grows. You gain equity, all while benefiting from tax breaks. The more good debt you use, the faster you can grow wealth without using much of your own money. This is how many wealthy real estate investors operate. They borrow to acquire income-producing properties. They reinvest the profits. They expand their portfolios, all while paying little or no taxes legally. Banks support this because they trust real estate as collateral. They won't loan you 80% to buy stocks or cryptocurrency. They will for real estate. Engage with communities like the passive path. Step 7. Start small, but start now. Don't wait for perfect timing. Take calculated steps. Learn and adjust as you grow. Remember, every crisis creates opportunities. Most people will panic. Few will prepare. The prepared will thrive. The passive path is here to help you prepare and to help you build lasting wealth. Like this video. Subscribe to the passive path. Comment below what steps you're taking today. Now let's wrap up with the key lessons you need to remember. Here are the key lessons. Inflation and deflation are happening at the same time. Most people will lose purchasing power, but those who own assets can grow wealth. The old rules no longer work. Saving money and working for wages alone will not protect you. The rich focus on assets, real estate, businesses, gold, silver, and some cryptocurrencies. They use good debt to acquire income-producing assets. They minimize taxes legally. They stay educated. They adapt to changing rules. They think in macro terms. They avoid emotional decisions. They take action. You can do the same. Start small. Think big. Keep learning. Surround yourself with people who understand these principles. Stay committed. Stay disciplined. Your financial future depends on the choices you make today. The Passive Path is here to help guide you. If you found value in this video, like, subscribe, and comment below. Share your thoughts and the steps you're taking to build wealth. Thank you for watching. Congratulations on taking the time to understand what most people ignore. You're already ahead of the crowd. Now it's time to take action. If you found this video helpful, like it, subscribe to The Passive Path, comment below with your thoughts or questions, and share this video with someone you care about, someone who needs to hear this message. Your journey to financial freedom is just beginning. Stay curious, stay committed, and remember, you're not alone. Feel free to watch other videos on this channel to keep learning, and I'll see you in the next video. Good luck.